Good morning. It is 7:15 a.m. Wednesday, October 26th. Here for the market open, New York session trade ideas and analysis. So starting with the economic calendar, today we have new home sales. New home sales data at 10 o'clock, expected to have a drop of 100K from previous, and new home sales month over month is supposed to have a negative 13.9% reduction. So they're already buffering the forecast to have a drop in home sales. Now, this may or may not have an impact whether or not we hit the forecast or have a reading way above or way below. But overall, not expecting it to have a huge impact. However, again, if we come out much lower than even the buffered forecast, this shows that bad data shows that the Fed can't continue to raise rates so aggressively. So the Fed is going to consider this as a dovish data point if it comes out even worse than predicted. So if it's worse than predicted, then the stocks will go up, gold will go up, US dollar will go down, right? And the opposite is true as well. So if it's a little bit better than forecast, it shows that the Fed has more room to go, more breathing room, and this will have the opposite effect. Higher rate hikes, lower stock markets, lower gold, higher US dollar. And other than that, we have the CAD interest rate at 10 o'clock as well. It's going to be interesting to see how much they raise rates. They're forecasted to raise it by 75 basis points. I'm not expecting this to have huge market impact unless they raise by higher than 75 or lower. But usually the central banks don't like to surprise the markets anymore. So they're pretty spot on with market expectations here. So expecting some short-term volatility around 10 o'clock, but yeah, not some huge market shifting news will be coming out today. Also interesting to note that overnight we did have some Australian dollar CPI that came out higher than expected as well. So month over month higher than expected, and a year over year higher than expected. So CPI inflation data globally is still a severe problem. All right, so now US dollar continues its weakness, right? So zooming out to the 4-hour here, hoping that trading view does not freeze on me. Come on now. All right, so US dollar on the 4-hour here continues its weakness overnight with some continued selling, right? So we've been bullish for quite some time, for over a year now, during this tightening process. After printing these highs, came down to create a higher low, retest previous liquidity zones, and came back up aggressively, but failed to retest these highs here, and instead started ranging for about a week or two, and then we came back and thought we were going to have a breakout. We thought we were going to continue to the upside, but no, we get rejections, and new lows formed, new lower high, and then since yesterday, continued sell-off. So we are coming into that demand zone that previously created these pushes to the upside. But as you can see, from the initial breakout, we created highs around close to 115, and then the second time we retested, we only went up to 113.5. Now the third time we retest it, are we going to have an even weaker bounce and continuation to the downside? Who knows? But for now, I am playing the sentiment of US dollar weakness here, as we have some consecutive bearish lower lows on the 4-hour and the 1-hour as well. Impulsive new lows over in the London session. Even this initial bounce is fading out already as we speak. So I'm going to be playing this overall US dollar sentiment, because correlated over to the stock markets here, see the volatility index is actually printing significant lower lows as well. So it's correlated with the US dollar, as stocks are overall positive here, as we can see in the S&P 500. We did finally break above this previous significant highs here, and we are somewhat starting to create a support. So it is likely to see the stock markets continue to rise for the short term, not forgetting that we are still within bearish structure, right? So that this is still just a pullback, and we are respecting significant daily structure, bearish structure, and even this supply level. So looking level by level here, even if we come back up to these levels here, we are still bearish on the higher time frames. Fundamentals are still bearish. Inflation is still way too high. We even see Australian economy come out with a higher than expected inflation. Global inflation is way too high. That is still the number one problem that central banks are facing right now. So the fundamentals have not changed. They need to raise interest rates. We need to tighten monetary policy. We need to bring inflation down at all costs, even if that causes a recession. However, keeping that in mind, that the higher time frames and the main bias is still towards these rate hikes, which is bearish for stock markets, which is bullish for the dollar. I'm not going to ignore that right now the overall sentiment is optimistic. The market seems to be hoping that in the next FOMC we're going to get a slowdown in the pace of rate hikes. That might be true, right? We may get a 75 basis points in November, and then we may slow down in December. We may slow down early 2023 once we get to that target rate of 4.5 to 5% that the Fed has repeatedly talked about. We may get that slowdown, but what the market is not pricing in, that even if they're optimistic that finally the rate hikes are going to slow down, we're going to stop raising every single meeting by the same 75 basis points that's been just destructive for the economy. Well, they also said that they're going to keep rates high for likely the entire year 2023 until we see inflation going down. So we still have high inflation. We still have these high readings showing that there is still a lot of work left to be done. And therefore, these rate hikes have still had zero effect on the economy so far. Now, having said that, the stocks, investors, the sentiment here, this hopeful slowdown in the economy, it's just some short-term delusional optimism still, as this bear market rally will get faded out, because in order to bring inflation down, we need to deflate prices of the economy. We need to bring the economy into recession. We need jobs to start, unemployment rate to start rising. It's sad to say, but it's the truth. We need the economy to shrink, which means people are going to lose their jobs, businesses are going to go bankrupt. There's going to be pain as people are forced to sell their homes and foreclose on higher mortgage rates, as debt price, the price of servicing debt is skyrocketing. Credit card is at all-time highs, and it's a bad recipe for disaster here. So, having said that, the overall sentiment is still bearish for the stock market for the next 12 to 18 months, let's say. But I am going to play the short-term optimism as we are getting confirms of US dollar weakness. We are getting confirms of the VIX slowing down as stock markets are maintaining some bullish structure here. So I am playing the short-term optimistic sentiment by keeping in mind that it is just short-term and potentially setting up better prices, better long-term swing setups in line with the fundamental bias. As we see, VIX has been down. Actually, stocks are pretty flat, which I'm surprised about, since the US dollar has had the biggest drop here. The pound is really strong here. The BXY showing an increase of 1.7. Still, the optimistic sentiment in the UK is holding some weight as the new Prime Minister, working with the Finance Minister, are showing a lot of optimism after investors were really after the last organization with Liz Truss was just a disaster for the UK. Finally, we're seeing some optimism, so we're seeing some recovery in the pound. Yen is strong as well. We're seeing basically these risk assets being pumped as gold is up as well, 1.1%. GU is up. Stocks are flat, which I'm surprised about so far, but could end up pumping up for today. And over in the currencies here, we see that again, US dollar is weaker against all of its peers. Here's the weakest currency today. The yen is mixed, and the pound is really strong. The pound is really strong. Only stronger than the pound is the Australian dollar, that again had some high CPI readings, so they're going to have to tighten and raise rates themselves. But I'm going to be focusing on playing that US dollar weakness in that pound strength. So I'm going to be transferring that over to my trade ideas for gold and GU. Starting with GU, again, we said that the US dollar is weak for the short term. The pound is strong for the short term here. So we're playing some GU buy side bias for today. As we analyze the higher time frames, we're still within a higher time frame bear structure here. However, from this most recent bearish leg to the downside here, created this previous low break of structure. We came up and we were respecting that level for the time being, came up to double top, but sellers did not come back into play. We actually grabbed some more liquidity here and we're pumping up to the upside, now printing new highs on the daily time frame, with room to come to the upside to retest these previous highs here around 1.1718 here. So there's a nice range to go to the upside based on the daily time frames here, right? So we're creating these higher lows and showing a bullish sequence of events based on the market structure. Looking at the 4-hour time frame, let me put my key levels back on here, as we are printing recent structure is showing a extremely bullish pattern here of successive higher highs and higher lows, a higher high, higher low, retesting 1.14, which was the structure level in the daily time frame, and overnight having this push to the upside. So we are bullish. Bullish on the daily time frame and the 4-hour time frame, and zooming into the 1-hour time frame, we are bullish as well. So we have confirmations of DXY weakness. We have confirmation of pound individual strength. We have a clear sentiment in the market of this delusional optimism. Even if it's delusional in the short term, still playing that clear sentiment in the market so far. We have good volume and volatility in the markets. We have strong impulsive candles. So the volume is there. So I am going to be looking for some trades on GU today. And these are my key levels that I'm going to be looking at. So we have this structure on the 1 hour. So if we can come down to retest these levels, this is going to be a good set of buys to retest the 1 hour break of structure, as well as this gray zone, which is the daily time frame structure. So this is a very important liquidity level. If we come down to 1.15, that's probably going to be a good area to buy. Even if we come down a little bit deeper, I've got this demand zone basically overlapping with that daily break of structure here around 1.144. This is also going to be a very prime spot to buy from, but given this volume volatility, I doubt we're going to get a pullback so deep within the session. But what we might get actually is so I'm going to mark this out as a gray zone so far, but we may end up getting the continuations above this zone to make our way to the upside here. And the higher time frame targets, if I zoom back out to the 4 hour, come on trading view, let's go. All right, we've got this wick rejection, which is that daily supply key level. That's going to be my higher time frame target to the upside here around 1.17. All right, and since we have a lot of momentum here, even on the 15-minute, we may get a 15-minute double bottom, which could play out in our favor as well. Since we're creating some sort of support here, if we do come back down to the zone, we may end up getting that continuation move from this zone. So looking for buys, we've got all our confirmations. Market conditions are ripe for GU buys in this session here. So these break and retest buys above 1.162, double bottom buys around 1.155, 156. 1 hour break of structure retest around 1.15, and also a daily break of structure at 1 hour demand zone retest 1.144. So these are all areas that I'll be looking for potential buys from. Now looking at the gold chart here, gold it's not as clean to me as GU. However, we are getting some bullish confirmations here, as we got this double bottom right around 116.20, aggressive highs, higher low, new higher high, breaking above these previous wicks here. So we do have some range to go to the upside. Around 1680 would be my target. So we do have about 100 pips to go to the upside here, where I'd be very cautious around this zone here, where we may get some rejections and returns to the higher time frame trend here. But overall, the sentiment is holding across the board. And on the 4 hour time frame, let me identify, first of all, this is a nice break of structure here, previous lower high within this pullback that was broken to the upside. That represents a good key level in the market as well. Looking at the 1 hour time frame, we've got this wick high as well. So let me identify that as a break of structure, this being my 1 hour demand. Now we've got this as a potential retest, 1662, 1661, previous highs. We also have 1655, 1654 region they'll be looking for some potential buys. And yeah, if we come back down to the 1 hour demand, 1650, I'd be a little bit less inclined to take these buys here. But these are good levels in the market, in my opinion, to be looking for some potential upside. And similar to GU, we are creating some support within the pre-New York hours here, around here. So we could end up retesting this previous 4-hour supply zone and getting reactions here, as we had reactions on 23rd of October. We had reactions on 17th of October, and we're breaking and having some reactions on the upside here, creating some support above today on the 26th of October. So potential buys at this key level as well. And similar to GU, if we do end up breaking these highs here, break and retest, but the range is a lot smaller above these highs. But those are the trade ideas. Looking for buyers on both gold and GBPUSD, playing this sentiment, US dollar weakness, pound strength, overall optimism in the markets. So we'll see what happens today. I'll be back to recap the session tonight.